Welcome everybody, welcome to Making Money in the Markets. I'm live, all right, sorry for the pause there. I just want to make sure I'm absolutely live first. And today I'm going to go and have a bit of a look at AI stocks. Now I do apologize for the slight delay, had a few technical issues. Just wanted to make sure I can get you the best quality. So here we are live. All right, let's get into it today. So what I want to go and do is look at whether we're in an AI bubble or not. Been a lot of talk about, the market's in a bubble, AI is going to pop, it's going to bring down the entire market. Well, let's go and investigate. Now, before we get going today, let's just make sure we cover our disclaimer statements there. Please note our general license number there. We're licensed to give general advice only. As always, please note past performance is no guarantee of future results. General advice only. As long as we're all clear with that, it's general advice only. And any forecast or backtest that we use today, it's a guide only. Okay, as long as we're all good with that, let's get into it. So what I'm going to do here is I'm going to load up VectorVest, and I've got Australia here to begin with, and what I'll do is I'll bring over America. All right, so there's Australia, here's America. So you can use VectorVest to load up both Australia and America. Lots and lots of detail in here. You can design the system for the layout that works best for you. You don't have to have it all looking fancy like this. If you want it a lot more simple, you might just simply say, well, look, all I really want at the end of the day is I just want these 3 or 4 gadgets. I can expand them out. I can make them bigger, smaller. Lots of functionality within the system. So I want to be clear on that. But what I want to go and do here is I want to go and have a look under here, viewers, and look at trading system viewer. Here are some of our key performing trading systems. A lot of these trading systems have done very, very well, thanks in part to some of the AI stocks. So the next question then comes down to, all right, well, what stocks are driving these AI performances, and where can I go and find those? And so what I'm going to do here is I'm going to go down to AI stocks. So I'm within watch list viewer within VectorVest, so I can open up all the watch lists. And in here I can have a look. Oh, look, AI hardware providers and AI ETFs. And so if you can't find a watch list, lots and lots of different watch lists that we analyze for you here at VectorVest each day. Big time saver because we've done all the work for you. You can simply open them all up in alphabetic order, go and find the ones you're after, and then you'll work out exactly where it is. So in this particular case, we house it under overview watch lists, AI hardware providers, and AI stocks and ETFs. Okay, so they're all here. So under AI hardware providers, let's go and have a look. I'm going to go have a look at these. So we all know a lot of these names here, big household names: AMD, NVIDIA, Broadcom, Intel, Qualcomm, International Business Machines, IBM. All right, so you probably have heard of all of them. I'm just looking through the list there. Maybe I might not have heard of Qualcomm until recent times, or Broadcom, but certainly all the others, right? But let's go and have a look. I'm going to right-click at the bottom on the watch list average. I'm going to view the watch list average graph. And I just want to have a quick peek. How are these AI providers performing? And I'm going to keep this indicator on here. We've spoken about it many times in the past, well worth repeating. This is our 12-month leading forecast on earnings. So this is the average. This is the average across all of these AI hardware providers. So if I right-click, view the watch list average, I've put on the EPS, which looks at a 12-month leading forecast on earnings. I'll pull that back over time, and you can see here as earnings go up, so there we are, earnings go up. As earnings go up, the average of those share prices go up as well. You'll see that correlation time and time again. And so straight away for the AI hardware providers, I would say to you straight up here to say, no, I don't see a bubble. As much as some of the articles out there like to talk about a bubble, I'm certainly not seeing that bubble whatsoever. Okay, so I'm not seeing any bubble there. All right, so close out of here. In fact, just before we do so, what I'm going to go do here is I'm going to go and have a look. Let's go and have a look to see what the sales and the earnings are like. All right, so just before we close out of here, I'll just take off the drawings. All right, let's do this. Let's look at the number of sales taking place. So this is the average of all the sales. Again, I'm not going to get caught up with the number as such. It's in the millions here, because this is in thousands, I believe. I'm not so concerned about the actual number itself. Yes, interesting to drill into each and every company. I'm just looking at the trend at the moment. If earnings are going up, right, per this graph here, and we're seeing those earnings that have been driven by rising sales. So we're seeing earnings going up, and we're seeing sales going up. Then it tells me that that things are on the right track. If I'm seeing earnings going up, but I'm seeing sales go a little bit flat, I'm saying, well, is that sustainable? They're probably just selling more and more hardware at a higher margin, but at some point they might not be able to afford to keep selling in those companies at that high margin. But here I'm seeing sales are going up. Let's have a look at the margin. Yet I'm seeing margins sort of stabilizing. It was very, very high a couple of months back. You can see if I go back here, where was it? Net profit margin at 78 cents on the dollar. My goodness. Now it's come off to about 64 cents profit, that being profit in the dollar. So margins actually stabilized, yet sales have picked up. And so that's encouraging to see, in the fact that sales keep going up even when things were pretty high. Sort of things sort of stabilized. Now the margins come off slightly, and yet the sales continue to rocket up. So that's encouraging to see. I think hardware providers are probably saying, well, maybe nearly 80 cents on the dollar was a little bit rich. They've pulled it back to about 65 cents on the dollar on average for the margin, and sales are rocketing up. And as you're making lots of money, 65 cents on the dollar, and selling a whole lot of hardware, AI hardware product, and then it's no surprises to see there that the earnings are going up. So I think this looks to me a lot more sustainable if the margins have come off than what they were back here, where they were a lot higher. All right, and the important thing is that the earnings keep growing. So I'm not seeing signs of a bubble. Now, never say never, because things can come off, fear can kick in, investors panic, and there's a herd mentality as everybody runs for the exits. But I'm looking specifically at the fundamentals at the moment, and I'm not seeing any bubble type activity. Now, sure, VectorVest, we calculate a valuation across the AI hardware providers, and it's fair to say that there's a premium being paid. You'll see the value of $164 across those AI hardware providers. The average value there, we've got 165 as of 21 October. All right, so 165 versus a current price of 208. All right, so what's that? Let's pull up the trusty calculator here. So what was it? 208 minus 165 divided by 165. Oops, that's not the divided by key. But anyway, you can see that there's not a huge premium being paid. Sorry, I pushed the wrong button for divide by. I think I pushed the minus button. But what was that? Was it what, 208? I've got a calculator here on my desk. 208 minus 165. So there's a 43 premium divided by 208 currently. So what's so it's about 20%. There's a difference between the value and the price of 20%. That's not a massive differential. Where I see stocks where it's 200, 300, 400 times differential, that's when I start becoming quite nervous. Say, well, there's a huge differential there, but that's not huge. Okay, so yes, a little bit of a premium being paid, but investors will often pay a premium for high performing stocks. I'm not seeing the earnings declining. I'm not seeing the sales declining. I'm seeing net profit margin tapering down a bit, which is actually positive considering that earnings are still growing. And I'm seeing the earnings growth rate outlook. So the outlook over the next 1 to 3 years, these companies are looking to grow their earnings by up to 16%. So I'm not seeing a bubble in the providers anytime soon just yet. All right, well, that's the hardware providers. What about the stocks and ETFs? All right, so we track 71 in total. Let's have a look here. I'll just double check here. I'm going to weed out the ETFs for now because I can't do the analysis on the ETFs for fundamentals and technicals because nobody can give you that definitively each and every day. So what I'll do is I'm going to make a copy. All right, so I'll make a quick copy here. And on the copy here, I'm just going to edit this. So here we go. So I'm going to call it just AI stocks. I'll take out the ETFs. You'll see what I'm doing now. All right, so I'm just going to put AI stocks. I'm going to weed out any of the ETFs. So let's click on the sector. I'll go across here and I will take out any ETFs. All right, let's see here. So there weren't many. I'll just double check. It was just these ones here. All right, so I'll just take them out. These are going to be purely the stocks. All right, so delete selected. So these are just purely the stocks now. Here they all are. So these are all the AI related stocks. Now, just to be clear, I'm doing this all in America, right? So the analysis today is using VectorVest US. So here it all is for American. So I'm now looking at 61. I've removed the ETFs. I'm just looking at the stocks. Let's go now and look at the watch list average. Same exercise to what we did before. Let's go nice and slowly on it, just to prevent doing information overload. So let's have a look. Here we go. Let's pull that back a tad. Here we go. That's the average of all the stocks we track for AI. Here are the earnings. And again, I'm not seeing any sign of a declining earnings just yet. All right. Well, are investors paying far too much for the stocks? Well, let's find out what the average is. So here we are. The average value is 123, and we've got it at 185. So what's that? 185 minus 123 divided by 185. What's that as a differential? All right. So there's a fair bit of a premium being paid. All right, about a 40 odd percent. If I've done my math right, about a 40 odd percent premium being paid. So, is it a bubble? Well, plenty of technology stocks have a premium being paid. The premium will continue to be paid provided that the performance continues to go up, which is driven by the earnings. As soon as those earnings start declining, then watch out. Chances are that the price of the average price of those AI stocks will go down to meet the valuation. That's typically what happens. But to prevent that happening, as long as those companies continue to power up on their earnings. And so right now, I'm not seeing any sign of that. No decline just yet over there. Let's have a look at net profit margin. 14 cents in the dollar. So for every $1 of sales, these companies are making about 14 cents in the dollar. And here are the sales. Up they go very nicely. So sales are going up. Net profit margins going up. All right, what about the earnings growth rate? These companies are looking to grow their earnings by up to 14%. All right, in the next 1 to 3 years. So from a fundamental perspective, I'm just not seeing any sign of that fundamental breakdown. So, I am a little bit at odds as to some of the articles coming out to say that there's a massive AI bubble and that it's about to pop and that investors are going to lose a lot of money. Maybe I'm missing something here. But at the end of the day, what's going to drive that narrative, I'll just put the camera onto me, what's going to drive that narrative ultimately is if there's a share market crash, right? So the share market falls away, chances are everything gets sold down heavily in a share market crash. And so those that have been calling for doom and gloom on AI will say, look, I told you so. But having said that, if everything falls in a market crash, well, everything falls. But the way I'm seeing it right now, I'm not seeing any fundamental signs of a tech bubble pop type equivalent in AI. Okay, so just not seeing it just yet. So I just want to go on there for the record. Time will play out again. I can't give you any personal advice, general advice only from a fundamental perspective. I'm not seeing any decline on AI stocks. Let's have a look at the comfort index. And so we've looked at that before in the past videos, and so this is a indicator on a scale of 0 to 2, and it's looking at stocks in this particular case, the list of stocks here testing new highs and resisting severe or lengthy price declines. So I'll make this jump out a bit more. So it's on a scale of 0 to 2. Ideally what we want is we want a group of stocks where the CI breaks above 1 and holds above 1. So right now you can see it's broken below 1 and it's bouncing around a bit. It tells me that the trend is not that strong at the moment. All right, so despite the fundamentals being very strong, the trend has been a little bit up and down as represented by CI. So what I'm going to do here is I'm going to have a bit of fun and make it really jump out now. So here are the AI stocks in America. Let's go and find the best combinations of fundamentals and technicals and really make sure that they jump out. So the first thing I'm going to do here have this indicator in VectorVest called GRT, earnings growth rate. So if I look at the first one here, it's got a really high GRT score. All right, so this company's looking to grow its earnings by a whopping 46% in the next 1 to 3 years. So that is incredibly encouraging. Rather than, say, looking at a company where the growth rate down here is negative 9%. And so if we have a look at this one here, it's under a lot more pressure. You can see that growth rate is falling away. This is not a great one at the moment. A great company. All right, so in terms of its performance. So with that said, let's go and do this. Let's go and weed out anything where we've got a less than 20% earnings growth rate outlook. So I'll take all these ones out. Here we go. Okay, so I'll remove the ones where it's less than 20, delete selected. All right, next step, I'm going to remove any sell-rated stocks. So these are stocks that are under financial pressure, or at least from a technical perspective. So we'll remove those out. Very quick and easy to do with VectorVest. Relative safety. It looks at the consistency and reliability of company financials, and yes, it's on a scale of 0 to 2. And so what I'll do for this quick exercise here is I'll weed out anything where the financials are below 1.2 on a scale of 0 to 2. So 1.2 is a very good score. And so anything below that we'll take out for now. Okay, probably done a fair bit for now. So I've trimmed it back to 11. Let's have a look how these stack up. So I've taken the AI stocks now. Let's have a look. Growth rate. It is coming off, but it's still sitting at 28%. I would like that to be powering up, but having said that, it is consolidating, and who's complaining at 28% earnings growth outlook? What are the earnings doing? Wow, look at that. So now we've got a beautiful set of earnings. There they are. That's the 12-month leading forecast on earnings. So we look at historic, current, and then we build in the forecast. So that's stacking up really well. Net profit margin at a whopping 39 cents in the dollar. That really jumps out to me. And these companies, wow, look at the sales. Sales just keep trickling up and up and up they go. And so there is my take on the AI stocks, not the hardware providers. This is everything now other than the hardware providers. That to me doesn't look like a bubble. Sales are growing. Net profit margin, very steady. Earnings continuing to grow. And the outlook on the growth rate looks very, very strong indeed. All right, so the last thing I'll leave you with, and that is, it's easy. My camera's gone a bit awry there. I'll just fix it up. But, you know, it's easy to look at historical sort of cases like the tech bubble pop. And it's, there we are. Hopefully I'll fix the camera up. It's easy to look at historical cases where, you know, you look at the story behind the tech bubble pop and say, well, you know, it's going to happen again. You know, the tech bubble pop's going to happen again. Look, it's going to happen with the AI stocks. You got to remember that the tech bubble pop occurred on stocks that had no fundamentals behind them. You know, the earnings profiles were negative. They weren't performing very well. They didn't have established markets that they were selling product into. It was all just pure speculation, and that ended quite badly. If I have a look at, say, this list that I put together on AI stocks, Taiwan Semiconductor sells millions of dollars of semiconductors worth a year. It's one of the most important semiconductor plants in the world. Just about everything electronic needs a semiconductor these days. You cannot build a motor car without requiring a whole lot of semiconductors for the online computers in a motor car, right through to everyday computers, laptops, right through to your mobile phones, right through to everyday electronics that a lot of us need to do our jobs or to make our life easier. So, you know, I'd be surprised if someone said that was a highly speculative company and that it's going to amount to nothing. NVIDIA, you know, plenty of stories behind what NVIDIA does. It's not just simply selling electronics. It's vertically integrated into all sorts of different things. Meta platforms, yes, believe it or not, it's in the AI space. And as you're probably well aware, but if you're not, heavily into AI as well. So, you know, you run your eye down here, Amazon, you know, Spotify, there are big name companies. These are all part of the AI story. And so these are not like the tech bubble stocks with, you know, 2-cent shares that nobody had ever heard of, that had shot up to, say, $2, that had literally no earnings behind them. And so a lot of those tech bubble stocks, if you'd graphed them back in the day and you'd put on, say, earnings profile, you put on the net profit margin, the sales, and the earnings growth rate outlooks, these would have been most likely been negative. The earnings would have been falling. The net profit margin would have been negative. The sales would have been dead flat. They weren't selling anything, and the growth rate outlook would have been highly negative. So anyway, I want to point that out. So there's my take. Time will tell if there's a share market crash. Oops, sorry, I actually wasn't showing you that graph before. Let's go and do it. This is one I was referring to. So if I was to go and graph, say, Spotify, for example, if this was a tech bubble type pop stock back in the past, the earnings would have been negative, net profit margin, sales, growth rates, everything would have been negative. That's certainly not the case. And sorry, I know I wasn't showing the screen before. My apologies, but there it is, Taiwan and semiconductors, NVIDIA, Meta. These are not no-name brand type stocks like a lot of the tech bubble pop type stocks back in the day. Anyhow, time will tell what will happen, but having said that, if there's a share market crash, well, then you've got to remember everything will go down with the market. And so some of the naysayers may say, well, I told you AI stocks were going to crash, but yes, everything else has crashed as well. But as long as those earnings continue to hold up, and as long as the market doesn't go into a crash, chances are a lot of these stocks will continue to power on and hit new highs in the years to follow. For now, at least until the narrative changes. Hope you got a lot out of it. Thanks again for coming along. We'll see you same time, same place next week. Thanks again. Have a great day. Bye now.